morning, everybody. Welcome to the live stream. And it is Friday. Well. Let's get this started. So, for anyone who is here for the first time, welcome into the Everyday Growth Advisors partnered with Option Swing. We are a community that have about 800 traders trading options and all about education first, profit second. Check us out if you haven't already. Our Discord is already starting to pop off right now in the morning. Night chat's all down and wrapped up, and I want to welcome you guys with warm arms to this live stream. So we are going to go through our pre-market checklist today, and I have some interesting stuff for you guys to look at. Do our daily run through the news for entertainment purpose. So we have, basically Bloomberg covering that the investors shift in focus as the global revival of the bull market nears. We have Oxford professors saying that the vaccine might be produced by autumn. We have Indonesia saying that they should not gather during one of the most important months in the year. And we have expected contraction in global GDP, which is definitely assumed for a while already. Yeah, so, the basic stuff. That the world's gonna end and we're all gonna die, that kind of thing. But nothing really that interesting per se. But there was, I think, a big amount of deaths in the U.S. today, which is not good. And rest in peace for all those people who have lost their lives to coronavirus till date. China's GDP has contracted. I believe that was a headline yesterday, and the news is still cycling that. And then we still had futures rallying upon all of this wonderful news, which is the topic of conversation for today. I was doing a post-mortem analysis on the market, and upon my analysis and my usual collection of information, so you guys don't have to do it. As you know, my job here is to basically research the market and present it to you in the most efficient manner so that you don't need to go about running and getting all the information. I do it for you. You just come here, you sip your coffee, and you enjoy this live stream so that the hard work is done and presented for you on this golden platform. So the thing that I was looking at was I just want to go through the reasoning to why we are rallying. Okay, we know that this down wave was a very big impulse wave caused by selling, and the 20%. What we do have 20% level usually is entry of a bear market, right? But we went all the way down to about 38%. Okay, and 38% of the market was sold off before we rebounded. And now we're up about 28%, okay? And which means that when there is a reversal of more than 20%, that is a beginning of another bull market, okay? This is not according to me. This is not according to, my analysis, or I'm going off what is the market terms for a correction and a resumption of a bull market, okay? So the idea is if the market corrects 20% from the bottom, that is the start of another bull market. This doesn't mean that we're going to go like that, right? And then off the charts all the way. No, it doesn't. With every correction, impulsive wave down, there's always a corrective wave. And the same thing happens when we're going up. So we should expect these kinds of movements up and down, up and down, up and down till we go, up. It's kind of like a breathe in, breathe out. Market's always breathing in and then breathing out, breathing in, breathing out. And so the interesting thing to note here is the fib levels that I've drawn. So upon the contraction from the swing high to the swing low, the 50% fib has already been breached. And now we're actually on our way. If you can see, this is where we're at right now. We're actually on the way to test the 61.8. Now, initially when I was doing my assessment that this would be a dead cat bounce and that we would see a bounce from this level back down, I had no idea that this would happen, right? And the reason why this happened, now that I think about it and I do my reflection on why all these things happen, was because we were rallying on very low volume. And the reason for the low volume is because everybody who wanted to sell has already sold over here, leaving no more sellers. Everybody who sold left the market. Hence, we had no more sellers in the market. And so, with only buyers left, we started this climb up. And we thought that sellers would come back at this region, but the remaining buyers who wanted to sell were not that great. They only managed to retrace back to the 23.6 before capitalizing on the upside again. So the main thing here to note is that we are rallying on low volume and the volume has refused to improve. We don't see big volume. And this market is definitely on track to hit the 61.8 fib retracement before seeing some corrections. Now, what I really do think though is, and the reason why I think this is because if you look on StockBot, you can see I pulled up this morning some numbers on SPY. Okay, have a look at this. The put to call ratio is still crazily bearish all the way till mid-May, and there's only one day in mid-May on 20th May where calls outweigh puts. The rest of the month all the way till 20th May is all being bet on the downside. And in fact, the fact that everybody's betting on the downside, that means that everybody's shorting the market. Now, if everybody's shorting the market, it just means that there's oversupply and very little demand, because everybody wants to be a seller, but nobody wants to be a buyer, right? And that just means that we may continue to melt up. There is a very high possibility that this continues, and shorts will continue to get squeezed because there are just no more sellers left. Everybody who wants to be a seller is being squeezed out of this market. Now, of course, this is my own opinion, and this does not mean in any way that I'm right or that you should follow what I'm saying. I'm not a licensed financial advisor to give you that kind of information, but I am giving you my analysis, and you could take my analysis in any way that you desire. I do see us touching the 61.8, and I will be looking to add some put positions for 2 months out this time. I'm not going to take the risk of even doing a month. I'm going to do 2 months out. So I'm looking at, let's say, I'm not taking any positions today. I'm not holding anything over the weekend, for this market is too uncertain. But on Monday, perhaps 20th, I may take options for June and write those out. They're going to be a little higher in premium, but there is going to be definitely a chance for me to capitalize on the corrective wave downward once this wave is losing steam. You can see the wave actually started to lose steam, except for today, where we broke above, which is actually, we should definitely come down today to come and test this level before resuming back up if that is the case. Now, the case for the bearish scenario, which is about to come, is this. So once we draw the extension from the top to the low, the high to the low, we need to draw another extension from this low, because this was the higher low, into this extension on the top. And if you can see, the fib extensions for those levels are somewhere here, the 50 and the 38. 50 and 61.8, these two right here, right? So we can see a rebound back to this level. However, I will be watching very closely to see if we can hit a full retracement, in fact, because when bears sell, we know how aggressive they can get. And, bulls always climb this wall of worry, but bears slide down this slippery slope. So if SPY goes down to test this level and breaks this region, I will be looking to add more puts here so that we can test this level here. So that's going to be the bearish case and then the bullish case covered today. I want to make sure that we cover both of those. In other news today, we have pre-market movers, Gilead called out by Jason on option swing, a great win here. If you hadn't played this, we have been calling out Gilead for a long time, okay? And I've been holding those two calls for a while. They've been deep in the red, and I think today it's going to pay out. So congratulations to everybody who has been holding. We have a lot of shares being traded, almost 4 million shares of Gilead traded pre-market. So expect a lot of volatility today. Other one is Taranis Tech, and almost 22 million shares have been traded. We have Carnival Corp, CCL, Apple, also part of the pre-market movers today, American Airlines, and then this A2 Bioscience, which is another one. So definitely want to watch most of these tickers today, especially Apple, CCL, Gilead, AAL, Moderna as well, with a nice 18%. I'm guessing this is one of those synergy stocks where one rallies, the other one rallies. Yeah, so we have those. In other news, as I covered oil in our previous live stream, this is not the oil that I want. Well, actually, it's easier if I pull it up here. So, US oil continues to sell off here. Story is still the same. My analysis has been posted on the chat. I did a very deep analysis. I don't know if you guys had a chance to read it. Very, very thorough analysis on oil and how the trade balance of oil is not balanced yet. We have global consumption that was 85 million barrels per day. The new global consumption is now 30% less, and we have an oversupply of about 30 million barrels per day. And so far, we have three projected production cuts by OPEC at 9.7, at 7.7, and 5.8, which brings our final projected production to 71.8, which is still oversupply. So oil is going to continue its bearish case. And I did mention before on, I think, 2 live streams ago that I wanted to buy oil. However, after looking at the new OPEC numbers, it's apparent to me that this may not be the time to enter at all. In fact, since we just broke below on more bearishness, we might want to wait this out to actually enter. However, I do have positions open in MRO, Marathon Oil. They're a small position, it's not too big, maybe about $500 worth of contracts, and they're for July. The important thing to see oil rebound here is we need at least a 10 to 15% increase in demand for oil consumption. And that's going to come from a lift of lockdowns or the economy restarting. However, I don't see that would be the case in the near future as this virus continues to make headlines. And VIX is sitting actually at a very nice level here. I want to point it out that we do have a little bit to move down with VIX. We might actually even see it break below this and then start to reverse, which would be in line with our analysis for SPY as we try to go up to test the 61.8. VIX may come down to test this level before resuming its uptrend. So that's just a couple of things I wanted to point out, which made sense to me. There's also bonds, which have been heavily bought up. I did mention this was a long play for June, July. I expect as the Fed releases more monetary policy or some more buying of treasuries, we're going to still see bonds continue to rise, especially TLT, which is this right here. However, I don't feel comfortable buying into bonds here. I will only be a buyer of bonds if we can see a retracement back down to the moving average. So I will not be getting into bonds. Gold has also seen record highs. We may continue to see gold go up. However, since the atmosphere would be risk off for a while, as we can see us moving up towards the 61.8 fib and then retracing down, we may see gold as well see some risk off. So those are all things that you have to keep note of. I am on the sidelines right now. I am not in any big positions. I will be waiting to see what the market is moving and only taking day trades as usual. And yeah, so that's pretty much all that I have for you guys. Let's start the Q&A. Any questions and answers that you have, please post them out here right now so that we can get those answered. How do you search for stocks most likely to move based on pre-market volatility? Yeah, so that is what I just went through, right? Um, Pre-market volatility is one of the ways that you can look at it. If shares are being traded for that stock within the day, there's a very high chance. Look, like Gilead is already at 4 million right now, right? There's a very high chance that this stock is going to be volatile for the rest of the day. Even Apple at 1 million, but this is not a lot. Whatever this stock is, TRNX, it looks like a penny stock, but you might want to stay on top of it. Things that are moving like that usually have some uh, uh, things to do with it. So, yeah, definitely keep those on your watch list. There was also another watch list. You can use this one by Market Watch that covers other kinds of stuff as well. Remember to ignore the ones that have very low pre-market volume, because if something moves on low volume like this one, if something moves on low volume like this one, that's not a very credible move. Um, Other things that you want to watch for is also the true range of the stock. So using the ATR, you can find out what is the volatility of the stock. So you can definitely use that metric as well. These are, so anything below 1 million is usually considered low. You want to have a look at the ones that are below 1 million. And since Netflix had a very big rally recently, and Roku as well, so I'm guessing this is the reason why those two are down today. So Roku, Netflix, RNG today down. This is a stock that is me and Jim have been really blistered by in the past, and ATVI, Activision Blizzard, probably because of a rally as well. All right, so let's see if we have some questions today. Why GLD is gapping down? Could it sink further? Well, it could sink further. That's actually a very good sign that risk is coming off the risk. Yeah, people are trying to take risk off the table, because don't forget, gold is not considered the ultimate safe haven. Dollars are. Gold is still considered a somewhat risk asset. When the market was selling off, gold was selling off with it. And so you have to realize, if people are selling gold at this level, maybe it's just that demand has run out and supply is overtaken. So there may be a lot of supply here and no demand to push the price up further. So this may just be a play on just lack of demand. But if gold has breached this level here, which is, let's see, what is it? 159, let's say. If gold breach 159, then yeah, you should probably short this for a bounce on the moving average. Very high chance that it can come down. And let's see, would you take a call on MRO? I wouldn't take a call on MRO right now. I would wait. I would wait for oil to bottom out. We do not have any evidence that the situation with oil is improving. As I mentioned, the situation with the oil inventories are not being sorted out, and demand is not improving. So if there is supply that's continuing on pumping out and no demand, we will see oil go down further and MRO with it. People are putting risk back on the table and buying stocks due to optimism. This means that gold is considered safe haven. It's not attractive anymore. Yeah, this could be the case. However, I see the gold scenario to be more of a demand and supply than the risk back on, because ultimately what's going to happen is, okay, so let me explain to you something. Right now, retail investors are buying stocks and buying ETFs here, which is the absolute wrong time to be buying, right? You want to actually let this play out till it touches the 61.8, which will coincide with the 150 and 200 moving average, and see how that reacts. If SPY breaks through this level, then yeah, you know what? You can go balls deep and buy stocks if it closes above, if the candle closes above this level, right? However, if we see, a series of rejection candles here, which is very, very possible, then you'll see that investors made a really bad move. I'm talking about retail investors, people who are trading on Robinhood and TOS and do not, do professional trading, they're gonna get caught on the top over here, and then the market's gonna reverse on them, and then they would be saying, "Oh my goodness, they have been short." Don't forget, all these investors have been short since this level. They have been short, and the market melted up because it was low volume and no sellers. And now when they're up here, they are buying, and they're gonna get completely bamboozled. They're gonna get gilly-whacked, as we like to call it on option swing. So that's the case here, and gold is gonna fall along with it. You have to keep that in mind. What are your thoughts on REIT stocks? These are great. However, you wouldn't want to buy REITs in this environment. Don't forget, those are real estate investment trusts. And the biggest problem with that right now is that people are not collecting rent. All of those companies are going to have issues with credit. So not a time to be buying REIT stocks. However, if you want to buy them for the long term and hold them for a discount, buy the ones that are really great. Don't buy the risky ones. This is a positive move, but doesn't take over the fact of how bad retail sales are, unemployment, oil levels, and more. Most financial crises occur because of one sector failing, businesses having every sector get hit. This is true. Definitely, we can see that there is a lot of bearish news coming from the economy. However, you have to note that has already been priced in during. I hate saying this too. Like, believe me, I hate saying this, but this drop already took care of most of the bad news that we had expected. The rally now is solely based on what the market is projecting for the next 6 to 8 months. And don't forget, as I said in the previous live streams, the market is not the economy. The market always is 6 to 8 months ahead of the economy. It is the leading indicator of the economy. Hence, this is already pricing in some sort of a correction, some sort of a positive development in our economy. Okay. RNG seems to move inversely to SPY. No, I don't agree with that. It definitely moves along with SPY most of the time. Maybe right now it is moving over against it because of how it's rallied. What are your thoughts on Boeing and Disney? Okay, so let's have a look at Boeing and Disney. Let's change this to the singular view. Let's do Boeing first. I'm pretty sure that Boeing is is in a scenario. I was kind of doing analysis on Boeing yesterday. It seems to me that Boeing might see has been seeing some selling pressure. And yeah, I was right. So let's see how this is going here. Okay. So Boeing has been on a complete obliteration, right? From its multi-year highs of 400, we had come down all the way to 90 something, rally back up to 180, and now we're moving through this level. We have failed to even come up to test the 50 moving average, which means to say this stock is going to take a very long time. This is on the daily time frame. So remember, guys, this is a very strong analysis, right? The longer you go on the time frame, the better your analysis gets, the more probable that the analysis is going to be deeper. So remember that this is already in a impulse corrective. Oh, shouldn't use that color. Hold up. Let's see, green. Impulse corrective, and now possibly another impulse wave. So I definitely see Boeing coming down further. However, you may see a little bit of a push up before the come down, because as I said, we're anticipating SPY to go up to test the 61.8 fib retracement. So whenever you're planning a trade right now, remember and keep in your mind that we may rally up, and just have that in the back of your head, because we could obviously just ignore going up here and just go down, but you should always keep in the back of your head that we could try to touch this level before coming down. And then Disney is the other one. Disney is actually a pretty good stock, but the issue is that Disney owns a lot of sports channels as well, and the problem with that is right now, since all sports networks are not running any shows, Disney also takes a hit from its portfolio. And so that's the reason why Disney has not been able to recover with the broader market, right? You have to take into account their portfolio accounts not only for their Disney Plus, which is a small segment of their revenue. All their parks are shut down. All of their entertainment and merchandising is on a standstill, right? So I definitely see a bearish case for Disney continuing as well. However, you may see a test above here. We have been making consecutive higher highs but this may fall with SPY ultimately. So I wouldn't take any long positions on Disney right now, not until this situation improves a little bit. What size of volume do you consider high gets your attention? Anything above 1 million usually gets my attention. Thoughts on ISRG and Amazon calls? Definitely do not get Amazon calls right now. Definitely the wrong time to buy that. Amazon is, I mean, if anything, you want to play Amazon, you got to play puts. You can't play calls on Amazon. The risk to reward ratio is already priced, completely favoring bears at this moment. So let's do Amazon first. I actually wanted to break down Amazon. Amazon has been on a crazy tear. We've seen a rally up from the 2000 levels all the way up to about 2005. Almost tried to touch 2005, but we failed to break that level. There has been volume increasing throughout the past 4 or 5 days, and we've been on a crazy run. I don't think it is wise to play. So let me show you what how I do this breakdown. Okay, just since we have time today, I'm gonna do it with you guys so that you see how I view this, how I would think about this in my scenario, why this is not a good trade. Okay, so let me do the breakdown with you guys. Let's say, all right, let's do that, and then let's do this, and let's say 2005. Okay, and then let's do the stop loss to be below this. Okay, and let's put this as red, and one more line right here. Where's the entry? Okay, so a few things. Look, let's say that this is your entry price, where the yellow line is at 2408, right? Now you have to think of it from the risk to reward ratio level. So if this is your entry point here, your exit point, which is going to be 2500, which is the next so-called resistance, right? 2500 would be a psychological level, also which coincides with the intrinsic valuation that I had come up with Amazon months ago. Now, if you think that Amazon's going to hit 2,500, then this is your distance of profit, okay? Now, you have to make sure that whatever trade that you take has a 1:2 risk to reward ratio, okay? At least 1:2. 1:2. So if this is your distance from, oh, and I drew the red line as a stop loss, okay? So let's say that your stop loss is 2408 minus 2327. That leaves us with $81, okay? That is your 1 hour distance. 1 hour equals to $81. Now, in order to achieve a 1:2 return risk to return ratio, your upside has to be 162, right? Do you see that? Because 81 times 2 is 162. Now, the distance from here to the proposed risk level that you are about to project is only $100. This is only about 100, which means to say that your risk to reward ratio doesn't give you a good trade. Hence, I don't want to play this. I would rather not chase this stock. It's not worth the risk. And that's how I basically do majority of my risk analysis. It stays the same throughout, no matter what you are analyzing. It stays the same. Okay, that's your method. ISRG. So the next one is ISRG. All right, so let's see if we can get this. By the way, if you guys are here, it would really mean the world to me if you smash the like button on the videos. Honestly, and subscribe. Make sure that you subscribe, because you'll really help me out here. YouTube's algorithm, it shows videos that have a good amount of likes. So by you hitting the like button, it really helps me out. Also, drop a comment, keep some show me some love. Maybe drop an emoji. Maybe tell me what you want to see in the next live stream. Maybe just say that you love me. That would be nice. Just kidding. Okay, ISRG. What is this? Intuitive Surgical. Ooh, wow. Oh, I've never ever analyzed a stock or heard of it before. oh man, this is very choppy. So a lot of gaps and a lot of I wouldn't per se get into a trade here. If anything, it seems to me that there's more downside than there is upside here. And the simple reason is because the candlesticks are trading below the moving average on the daily. We have on the daily, majority of this is moving in a channel. We have failed to break this level numerous times. And it just seems like it has reversed into a downtrend, in fact. You would have to do more research about the fundamentals of this company. However, it seems to me that there's more downside pressure on this stock than there is upside. However, you could be a buyer if this stock price is able to break through this old resistance and validate it as support and play it to the upside to 620. So overall, this is sitting in the middle, and I hate to trade stocks that are sitting in the middle. You want to either buy it here or, you want to sell it here, but don't buy it or sell it here because you'll get stuck either way. So I don't like these kinds of setups. Wait for the setup to come to you. Don't force the stock. Let's see. What do you think of Tesla? As always, great stuff. Thank you very much, man. That's very nice of you to say. What do you think of Tesla? Okay, Tesla is another one, right? It's kind of like the Amazon case, except for the difference is that Tesla has a fan base of very, very loyal Wall Street bets and Elon Musk fans that drive the price up on a whim. So we have seen a crazy run up, and knowing Tesla, we could see a further run up. It just depends on how we extend here, but it still remains the same Amazon case. However, this is a little better scenario because there actually is an upside to 900, 900 plus, right? So if you were to do the risk to reward ratio analysis for this one, you actually do have a risk to reward to play here. The only reason why I wouldn't play this is because it's so damn expensive, right? Let's do the risk to reward ratio, right? Let's just say this is the level we are aiming at. Actually, you know what? Yeah, it doesn't even look like no. Actually, it doesn't look like we will have a good risk to reward ratio here. Let's assume that this is your 1 hour distance from this gap down, and assuming that this level here is going to be your support. If you have this is a stop loss. If you enter your trade here, where it's slightly above this line right here, let's move this down. It doesn't seem to me very probable that you will benefit from this trade at all, because I don't see us rallying. I don't see us rallying to 964, especially since we are anticipating SPY to make a reversal here, kind of like that, right? So I wouldn't play Tesla just yet. However, with this stock, it has always been the same motto: you risk, you reward. As simple as that. If you risk with Tesla, you might reap the rewards, or you get burnt. So there's only two ways with it. I personally wouldn't play it. I would stick on the sidelines and wait for a better entry. The time to buy Tesla was here. That was the time. Let's see, what else do we have? Do you think that Zoom is overvalued? What are your thoughts on MU puts into next week? Okay, what do you think let's do this one first. What do you think? Do you think if Zoom is overvalued? Well, overvaluation, the questions about overvaluation are a fundamental analysis, which is done differently. Since Zoom is a tech company, it's also very difficult to value its business. However, Zoom has not been affected by the coronavirus at all. In terms of valuation, I would think that it is going to be on the slightly overvalued side. However, you would have to do a full fundamental breakdown for that, which I can't go through right now. It's way too long for that. I would be happy to help you with the analysis if you message me on Option Swing, and go through with you and come to the valuation. So message me if you're an Option Swing, and I can get that kind of sorted for you. But in my rough view, I think it is slightly overvalued. What are your thoughts on MU puts into next week? Okay, so Micron is a very nice stock. I like that stock personally. It has a lot of benefits for. It has a lot of potential benefits for the environment that it is trading in. They primarily make storage chips, and those are in high demand right now. So puts into next week sounds like a good play. Trading below the candlesticks, inability to break this region here. And also looks like that was a very strong resistance level. Yeah, I think that playing puts here makes sense. The downside risk is risk to reward is there. So this is where you can, okay, so let me show you where this is a good trade to take, right? Okay, so this is your entry. Let's say your stop loss is here since we're doing puts now, and your take profit would be definitely somewhere here. Okay. So actually your take profit can be somewhere lower here. There you go. Okay, so let's say this is red because this is stop loss. This is green because this is your, no, let's just do this blue. So your entry, and this is green because this is your take profit. Okay, so this is now your 1 hour distance. Do you see that? Because this, since you're in puts now, this becomes the reverse, right? So now your stop loss is on the top. All right, no more in the bottom, because now if it hits this level, then you're out. So your stop loss is at 49.89 and you're opening the trade at 45. So let's just say you have approximately a $4 1 R. Okay, now you need at least 2 R, right? You need at least 2 R, which is $8. So do you get $8 here from 45 to 39? Close, almost, right? I think it's let's see, 45.57. Sorry, I'm just going to use calculator because it's just much more easier. It's 655 actually, so still not a very good trade, but it's still at least a 1 to 1.5 R, which is actually still okay. You just never want to keep it 1:1. You always want to keep it 1 to more than 1. That's the basic idea. So even though this is not like an excellent trade, it's still a good trade to take to the downside, because even if you don't hit your profit, you still made like a little bit of money. Realistically speaking, this take profit is very conservative because we could realistically go down here. But I like to set realistic take profits, you know, where I don't see us holding the trade for that long. So hence I always keep it as realistic as possible for when I'm calculating an entry and exit. So for Micron, it's not the best, but it's pretty good. Can you explain? Let's just say, okay, a gap is essentially when the stock price has been either bought up or it has been sold down like this from here to here after the market hours. Okay, so the gap occurs because somebody went, in this case, like right here, somebody went into the dark pool, which is the off the exchange, and put in a order for a big buy. That caused Micron's price to go up overnight, right? And because Micron's price went up overnight, the market opened up with Micron sitting much higher than where it was. That's why things gap, because players buy things after market is closed, or the market could have simply rallied and Micron was one of the ones that was bought up during the rally after hours. And that's like the basics of why things gap. There could be a lot more things, but that's basically the idea. Gilead technical analysis going into this morning. Let's see. So with Gilead, let's look at where Gilead is today. We are at 83.46. See if TradingView will, okay. So 83. Let's just say here. Okay, 83, whatever, almost there. Okay, we're gonna open up here, right? So this is where we're gonna open up. Until and unless Gilead breaks $86 today, we will see downward pressure on this stock, and hence I will be getting rid of more than likely I'll be getting rid of one, if not both, my positions if we can hit 86. if Gilead buys up and breaks 86 with good volume, I will hold one contract and sell the other. So it all depends on the first 15 minutes. In my view, there's a lot of mixed sentiment on Gilead right now, and I think the stock was bought up on a lot of rumors, and hence I think that it will come down as fast as it has opened up. So technical analysis wise, I think that it is wise to get rid of one of your positions if right at the market open, and hold the other one and see if it can break 86. If it can't break 86, I would sell both positions and then find a re-entry somewhere on the bottom there. That's the basic idea. But it is in a nice channel upward. I did mention in previous live streams, I have also done an analysis on Gilead, and I like the business for a long-term hold. So that's basic analysis. All right, cool. Are there any more questions? If not, we will aim to end this live stream here. Once again, thank you so much for tuning in today. Appreciate all of you guys turning up. Smash the like button, hit subscribe if you haven't. If you're first time here, check out optionswing.com. We are a group of traders that will always offer you free education, no matter if you want to tune into the live stream, it's free. You want to join Option Swing, yeah, you got to pay, but people mostly make their subscription back in like a day. And I think it's a great community to be a part of if you just want to learn. So thoughts on trading bank options? I wouldn't trade banks right now. Just a little uncertain. The thing about banks right now is I view their earnings as a positive rather than negative. I think the market is selling off majority of bank stocks because of the fact that they're building reserves. But I actually view that situation as a positive. If you look at their earning reports, they actually didn't do that badly. Granted the fact that they were conserving credit so that they can weather the storm that's about to arrive within the next few months. But as I said, this is one of those cases where we have neither here, neither there. It's in the middle. You see, it's right smack in the middle. The risk to reward ratio is not favoring you, so I wouldn't trade it. I don't like that. I like to buy things on extremes. Either sell it on the top or buy it on the bottom. There's no in between to make money. If you try to write this down, chances are you get burned if it goes back up. If you try to write it up, chances are you get burned if it goes back down. You're playing it in the middle. It's not a wise move, in my opinion. Nvidia puts for next week. Let's see. Nvidia. Yeah, Nvidia. Oh yeah, definitely. If we can see a nice sell-off with SPY, which I think is happening right now, in fact, then we can consider Nvidia puts for sure. Yeah, SPY is selling off. Yeah, you could consider Nvidia puts next week for sure, even without looking at it. Yeah, I would definitely consider buying puts for Nvidia. Just for the pullback though, not for a long term. I'm still very bullish on the stock, and I think that it will go back to all-time high very, very soon. As you can see, we barely broke below this region here, which is a very strong support. So expect, even if a pullback comes, don't expect it to go below this level here, which is like the 270 region. So maybe 270 puts if you want to be off the money. Give it a horizon of a month, and that should be your trade. Make sure that you do your own analysis and figure out the risk to reward ratio there. All right. Well, I'm going to end this live stream right here. Thank you guys for tuning in once again, and have a great trading day. Peace.